Good morning, everyone. Welcome to the SSBCI Loan Programs Overview. We are letting people in from the waiting room now, and we will get started shortly. Good morning, everyone. Welcome to the SSBCI Loan Programs Overview. We continue to let people in for just another minute, and then we will get started. Okay, I think this is a great time to get started. Hello, everyone, and welcome. This is the Division of Small Businesses State Small Business Credit Initiative, or SSBCI Loan Programs webinar. Today, we'll be talking about two of our SSBCI loan programs. And to do that, I'm introducing our program manager, Joanna Colson. She is the program manager for SSBCI. Before I turn it over to her, just a couple of quick housekeeping items. With this webinar, everybody is on mute. We ask that you put your questions into the Q&A and not the chat. We will get to as many questions as we can at the end of the presentation. And additionally, we will be posting the recording and the PowerPoint for this webinar on our de.gov/SSBCI page by noon tomorrow. And with that, let me introduce Joanna Colson, our SSBCI program manager. Joanna.
Thank you so much, Andrea. Hi, everyone, and thank you for joining our SSBCI webinar. As Andrea said, I'm the SSBCI program manager here at the Division of Small Business, and today we'll be going over two loan programs offered through SSBCI. Next slide, please. First of all, what is SSBCI? SSBCI stands for the State Small Business Credit Initiative. This is federal money given to the state to help small businesses, especially those that are economically and socially disadvantaged. Delaware is slated to receive $60.9 million from the U.S. Treasury over 3 rounds of funding at approximately $20 million each. We completed the first round of funding in January, and we're currently waiting to receive the second round of funding. Please keep in mind as we go over this information that the SSBCI programs are currently on hold until the second round of funding has been received. There will be an announcement made once we begin processing applications again. I'd like to clarify 2 important terms that we're going to be talking about when we talk about SSBCI. SETI and VSB. SETI stands for Socially and Economically Disadvantaged Individuals. To qualify as a SETI-owned business, at least 51% ownership must be held by individuals who face social or economic disadvantages. This could include minority-owned, women-owned, veteran-owned, or other groups recognized by the program, as you see in the diagram here. This designation can help prioritize access to funding and technical assistance for businesses that might face barriers in traditional lending. For this program, a VSB is defined as a business with fewer than 10 employees at the time of the loan. VSBs often face unique challenges accessing capital because of their small scale and limited resources. These definitions help the program target support to the businesses that can benefit the most, whether it's because of ownership or size. We offer 2 loan programs here at the Division of Small Business through SSBCI. They are the Delaware Loan Participation, DELPP, and the Delaware Capital Access Program, DCAP. Both of these programs require businesses to apply through a participating lender, which are banks, credit unions, and CDFIs that work with the state. DELPP helps small businesses secure bank loans by sharing the lending risk with banks. The state partners with lenders by taking a percentage of the loan, reducing the lender's risk, and making them more likely to approve loans that might otherwise be denied. DCAP also reduces a lender's risk. When a loan is made, the borrower, lender, and DSB contribute a percentage of the loan into a reserve fund. The reserve acts as a safety net for the lender. This can make the lender more willing to approve loans that might otherwise not qualify. First, we're going to talk more about the Loan Participation Program. This program is designed to help small businesses access financing to support growth and expansion. Through this program, DSB uses SSBCI funds to participate in a portion of the loan that's originated by and managed by a participating lender. Funds can be used for most standard business purposes, including startup costs, working capital, franchise fees, equipment, inventory, or purchasing or improving a place of business. This program is especially helpful for businesses that need credit but may not have strong collateral or a long operating history. In this slide, we're going to discuss a few key features of how this program works and what it means for you as a business owner. Overall, this program is structured as a partnership. Up to half of the loan is funded through SSBCI dollars administered by DSB, and the other half is funded by the participating lender. Each portion has its own interest rate. Because the DSB portion carries a lower fixed rate, when combined with the lender's interest rate, it results in a lower blended rate and lower overall monthly payments. Business owners apply to this program through a participating lender. The bank does its standard underwriting, and if the loan is a good fit, they work with DSB behind the scenes. Payments are made directly to the bank. From your perspective as a business owner, it's still a straightforward lending process. The loan term can go up to 10 years. In some cases, the loan may also allow for a balloon payment. What this means is your monthly payments are calculated, as if the loan were amortized over a longer period, which keeps the monthly payments lower. At the end of the term, you would have a remaining balance, the balloon, which you could refinance at that time. For many business owners, that structure helps with cash flow because it keeps payments manageable while the business continues to grow. Overall, this program is designed to give you more flexibility, lower monthly payment options, and better access to capital while keeping the process familiar and straightforward. Now we'll talk about the types of businesses that can benefit most from this loan participation program. The first would be small businesses needing traditional term loans. This program is ideal for small businesses that need term loans, whether it's for working capital, buying equipment, or funding expansion. These are businesses that might not qualify for the full amount on their own through traditional lending standards. Second are growing businesses that are still building credit. Some companies have a track record of revenue and operations, but haven't yet built enough credit history or collateral to fully satisfy a lender's requirements. This program helps bridge that gap by sharing the loan risk. The third are underserved business owners. The program is especially helpful for minority, veteran, and women-owned businesses, which face additional barriers when accessing conventional loans. And the fourth are businesses and industries with a higher perceived risk. So industries like hospitality, retail, or startups may find lenders hesitant. but if they have a solid business plan and positive cash flow potential, this program can help overcome those concerns. In short, the program is designed to open doors for businesses that are ready to grow, but might need a little extra support to get there. Now we're going to go over an example for a loan participation program. In this scenario, we have two experienced fitness instructors who want to open a franchise location. They have industry knowledge, experience, and a solid business plan. They approach a participating lender seeking $350,000 for startup costs and working capital. However, the lender determines it's not comfortable lending the full amount. The borrowers don't have enough collateral and their current income doesn't fully support the projected payment under traditional underwriting standards. So under normal circumstances, this deal likely wouldn't move forward. This is where the participation program makes a difference. Instead of declining the loan, the lender requests that DSB participate in 50% of the loan. That means the bank funds half, DSB funds half, and the total amount remains $350,000, so the borrowers receive the full funding they need. Andrea, if you would need to switch the view, you can do that. I see the chats coming through that the notes are showing. Now we're going to talk about the Delaware Capital Access Program. The program's designed for businesses that might have trouble getting a traditional loan, maybe because they have limited collateral or minor credit issues. It's especially aimed at steady and very small businesses. The program works through a risk pooling concept. Essentially, multiple borrowers at the same bank contribute to the same reserve fund, which the lender can then use as additional security. This makes lenders more comfortable approving loans they might otherwise hesitate on. The program prefers loans that are 5 years or less, though it allows loans up to 10 years. This helps keep the payments manageable while still giving you the financing you need. Here's how the process works step by step. First, you as a borrower would visit a participating lender. This is a financial institution that has been approved to administer the DCAP program. The lender then enrolls your loan in DCAP, which signals that this loan will be supported through the program. Next, the lender sends the required documents to us here at the Division of Small Business. We process the application to confirm everything is in order. Once DSB confirms enrollment, all three parties, the borrower, the lender, and DSB, contribute to the reserve fund. This fund is what helps secure the loan, reduces the lender's risk, and increases your chance of approval. Now we'll talk about who makes a good candidate for DCAP. First, small businesses that might have trouble qualifying for traditional bank loans. Maybe you're newer, have a limited credit history, or don't have significant collateral. The reserve fund in DCAP helps reduce the lender's risk, which makes approval more likely. Second, established businesses with a solid growth or expansion plans. If you're profitable or close to it and have a clear plan for the funds, like buying equipment, expanding operations, or hiring staff, this program could be a strong fit. Third, minority, veteran, and women-owned businesses. These groups often face extra barriers to financing, and DCAP is specifically designed to expand access for underserved business owners. Fourth, businesses in industries that are creditworthy but traditionally considered higher risk. Some examples include restaurants, retail, and service businesses. DCAP's guarantee structure makes lenders more willing to support these types of businesses. And finally, companies seeking moderate loan sizes. DCAP is not for very large commercial loans, but it works really well for meaningful growth capital that can make a difference for your business. Let's look at an example. Imagine an existing daycare business that needs a $50,000 loan over 5 years. They want to buy furniture and fixtures and also cover some startup and working capital. The business owner doesn't have enough collateral to meet the bank's normal requirements. That's where DCAP comes in. The SSBCI match helps make up the shortfall. Because the lender knows that this program reduces risk, they decide the loan is a good fit for DCAP. The business gets the financing it needs, and the lender can feel confident approving it. Here's a visual of how the DCAP Reserve Fund works. You can see the contributors are the borrowers, the lenders, and DSB using SSBCI funds. Each entity contributes to a small percentage of the loan, and that money goes into the reserve fund. This fund acts as additional security for the loans enrolled in the DCAP program. Because the lender feels more protected, they're more likely to approve loans that might not otherwise meet traditional requirements. This program is a team effort that helps your business get the financing it needs. How to apply for these programs. If you're interested in applying for DELPP or DCAP, you can contact one of the participating lenders directly, or you can contact me here at the Division of Small Business. If you are currently working with one of our regional business managers, they are able to help you as well. We have more information on our website at de.gov/SSBCI. And also, please remember that the programs are currently on hold while we wait for the next round of funding. An announcement will go out once everything is active again. Who are the participating lenders? We currently have 4 participating lenders. As you can see, we work with Del One Federal Credit Union, True Access Capital, Community Bank in Sussex County, and Pursuit Lending is our newest lender. We are actively looking for more banks to participate. If you're interested in becoming a participating lender, here's what the process looks like. First, we'll schedule an initial meeting to learn more about your institution and the types of loan products and services you offer. This helps us determine how SSBCI can best align with your existing programs. Next, you'll sign a master agreement. This document outlines the rules, responsibilities, and program guidelines for participating lenders. After that, we'll hold a setup call to walk through the loan enrollment process and cover any operational details to make sure everything runs smoothly. If you're interested in learning more, you can contact our finance director, Jory Moore, at jory.moore@delaware.gov. We're happy to walk you through this process and answer any questions. Our director, Jory, is also on this webinar as a panelist, and she'll be helping us answer questions after this webinar. So before we close, I want to connect these programs back to the bigger picture of how we support small business lending in Delaware. DCAP is one tool. It uses a reserve fund structure to reduce risk and help lenders say yes when collateral or minor credit issues might otherwise stand in the way. Our loan participation works alongside it. Instead of building a reserve fund, the participation program allows the state to directly purchase a portion of the loan. That reduces the lender's exposure, increasing lending capacity, and allows them to make larger or more flexible loans. Both programs share the same goal, expanding access to capital. Whether through risk pooling in DCAP or a direct participation in a loan, we're creating pathways for small businesses, especially those in underserved communities, to secure the financing they need to grow. For business owners, the message is simple. If traditional financing feels just out of reach, there may still be a path forward. For lenders, these programs provide practical tools to manage risk, serve more borrowers, and strengthen local economic development. At the end of the day, this is about partnership. When the borrower, the lender, and the state work together, we can move more businesses from almost qualified to approved. Again, my name is Joanna Colson. I'm the SSBCI Program Manager, and we'll be answering some general questions now. You can also email me with questions anytime. You can see my email information is on screen now. Thank you so much for your time today.
Great. Thank you, Joanna. I am also, oops, I think I might have just hidden Jory accidentally. Oh, no, there she is. She came back. That's great. All right. We are going to the question portion. As a reminder, if you have any questions, please drop them into the question and answer box and not the chat. We will be posting this webinar, which will include the question and answer section on de.gov/SSBCI tomorrow, along with the PowerPoint slide deck. So the first question is, how long does the process typically take to participate in the DCAP program? Either one of you can answer.
You mean like from the start to finish?
Yes, I believe so.
I think that depends on the lender, JJ.
Yeah, so it
Would
depends
you
on the
say?
lender that you go to and what their originating and underwriting process looks like. Typically, we ask that you give the lender at least 30 to 45 days to kind of review everything, depending on the type of loan. All of that plays a part in the length of this process. We do try to get these process along with our lenders as quickly as possible, but as always, there are things that take some time.
Thank you. The question is, are we still able to apply during this period before you receive your next round of funding?
Yes, you can still apply, but we won't be able to fund the applications until we receive the funding from the Treasury.
Which ties into the next question. Do you have any estimate about when the next round will be available?
We're in the process now. This is our first time going through this process. We're hopeful that it won't take much longer, but we really just don't know, unfortunately.
So I imagine people are wondering, do we think it will be a couple of months? Will it be within this calendar year?
Oh, it'll definitely be within the next few weeks. We're not anticipating going more than the next few weeks of getting the funding. We're just wrapping up some loose ends. Also, with that, there will be an announcement. So if you're not signed up for the newsletter, we'll try to put something out as well in the newsletter and email form to people who have applied through various channels that the funding is now available. So there will be an announcement once that's done.
Great. And in a moment, I will type in the link to our main website. And if you scroll to the bottom of our main website, that will allow you to sign up for our division newsletter. Question is there assistance with applying for these programs?
There is. You can actually talk to one of our regional business managers if you're applying directly for one of these programs to have some ideas before you reach the lender. If you have questions on a particular lender or their underwriting process, I would reach out to them directly. But you can contact either Joanna or myself, and then we can get you started.
Great. Question is about research and development tax credit. What does the process look like for up and coming Delaware businesses?
So for this question, we won't be answering that on the webinar. For that tax credit, I would definitely visit our website or contact one of our regional business managers or our director, CJ Bell. He may be able to help you.
Okay. This question is, what is the typical loan size and the average amount from this grant? And do you help put together a package for the lender?
Typical loan size varies. So for LPP, loan sizes can go up to 10 million. For camp, we try not to do anything over 5. That gets just because of the nature of the program. Um, this is not a grant. This is a loan program. So these are things that you agree to. You will sign loan documents and you will have to repay it. This is not a grant program. We do not put together packages for the lenders. The lenders have our applications and they put your package together. You start with them. When you're applying for the loan, if they feel like you're a good candidate for SSBCI, they will put all your information together, have you sign all our forms, and then send it to us.
Great, thank you. Joanna, can you kindly explain the risk pooling concept again?
Sure. When a loan is made by the lender, the borrower, and DSB each put in the reserve fund 2% of the loan. So with each loan, that pot grows and grows so that is there for in case a loan defaults. The lender can recoup some of the funds out of that loan.
Great. Next question. How soon do you typically have to start paying the loan back?
A typical timeline for commercial lending is 30 days after you sign your loan documents. But that is determined by the lender when your first payment will be.
Thank you. We are still open for questions. Give folks another minute or two to drop anything in that you may want to ask. Are there grant opportunities available? I can take this one. Yes, the division does have grant opportunities. Our most well-known one is the Edge Grant 2.0 competition. We are currently in the application review cycle. Well, about to be. Our application for this round closes on Friday. We will have another round in the fall, so I wouldn't suggest, if this is something that you're interested in applying for, to do it now. Look for the fall application period, and I will drop the webpage link in the chat for you. Here's another question. What if a company is just hitting revenues with limited but growing cash flows? How does the size of the loan, how does the size of the loan, or will they look out 1 to 2 years as far as payments back?
So if I'm understanding this correctly, Chris, you're stating like you're a new business. Typically, they like 2-year history. So it's a 2 to 3 year history, which will require 2 to 3 year tax returns. If that is not possible for your business, and you need to talk about like how you're doing projections, things like that, then I suggest that you talk with one of our regional business managers or Joanna before you apply, so we can help you kind of figure out what you need to provide if you don't have that information, if I'm understanding you correctly.
Thank you. So I did just drop the link for the Edge Grant in the chat, as well as the link for all of the funding options that we offer. You can reach out to one of our regional business managers to discuss those more in depth. And Tyler, that just answers your question there. All of our funding opportunities are listed on de.gov/incentives page. And the other thing is, if you sign up for the newsletter, again, going to business.delaware.gov, go to the bottom, enter your email, you'll automatically be added to our newsletter list that goes out every Wednesday. So our next one is tomorrow morning. And that also has funding notices from other entities, whether they be state, county, nonprofit, for-profit. We will generally put other opportunities in the newsletter, as well as news about resources available from many of our other partners. Does anyone else have questions? Right? Good question. What may not make you qualify for these programs?
That is usually determined by the lender. So maybe things like a very low credit score. What else, JJ?
So limited cash flow, low credit scores, insufficient collateral are some of the main reasons for declines in commercial lending. However, this is what this program is for. So what we do ask is, instead of not applying for the loan or not considering it, is that you talk to one of us or our regional business managers before you apply. So we make sure that you're fully prepared for that before you start that lending process. I do always tell people personal credit does play a part in loans. Even though you've opened a business, your personal credit is a factor. So I would definitely reach out as well before you apply.
All right. Anybody else? Any questions? Have the experts here. But if you have a very specific question to your situation, recommend that you reach out offline. Okay, seeing no other questions, I want to thank everyone for attending this webinar today. And again, we will be posting it to the SSBCI page by noon tomorrow. Thank you for your time.